Hello, and this is Global Business Insights, where we look deeper at the headlines from a business perspective. In the US, the Consumer Price Index, that's a broad based measure of prices for goods and services, increased 0.2% for the month. Year on year, the inflation rate was 2.9%, lower than expectation, and also the lowest read since March 2021. Inflation rate in the United Kingdom also today reported an increase to 2.2% in July from 2% in June of 2024. Yesterday, we also saw US wholesale inflation slowing in July. PPI was 2.2%. That was in July compared to 2.7% the month before. Producer prices give a view of prices that businesses are paying for goods and services and will feed into what will be passed on to consumers. Alphabet's Google yesterday unveiled a lineup of new Pixel smartphones embedding AI, including features that lets users search for information stored in screenshots. Users can also pull up Gemini, Google's chatbot, on top of another app to answer questions. Nigeria Central Bank announced that it was reintroducing the publication of several key macroeconomic indicators in a report that would inform insights. We also will replay our earlier chat on the Providus Bank Unity Bank merger. The Zurich-based banking giant UBS announced that second quarter net income was $1.1 billion, about double what analysts had estimated. In the quarter, the main wealth management business saw strong client inflows with $27 billion in net new assets. UBS shares are up over 5% as we speak. It's about 1600 GMT. Welcome back. The US Consumer Price Index increased 0.2% for the month as expected and puts the 12-month inflation rate at 2.9%, under 3% expected. This has to be good news for markets, as many are of the view it almost seals the case for a rate cut come September, albeit a cautious one. If you exclude food and energy, core CPI month on month was up 0.2% and a 3.2% annual rate, also meeting expectations. Still, sticky areas continue to be sticky, and a 0.4% rise in shelter costs were responsible for 90% of the all items inflation increase. Food prices also climbed 0.2%, while energy prices were flat. The Fed does not expect inflation, that's the monitored personal consumption expenditure index, to come down to their 2% target till next year. But confidence that the decline is sustainable towards their targeted goal will be enough to announce a cut come mid-September when the FOMC meets. Earlier, we got UK Consumer Price Index up at an annual rate of 2.2% in July after increasing by 2% in June. The UK reading was below expectations of a 2.3% growth and back above the Bank of England's 2% target. When Bank of England MPC met last month, they decided to trim, as expected, the bank rate by 25 basis points to 5% as inflation held at 2% in May and June, also the central bank's goal. The Bank of England had said it expected inflation to rise further this year, reaching 2.8% by December as the temporary drag from energy prices fades. In the Eurozone, inflation also went up to 2.6% in July from 2.5% the previous month. The Central Bank of Nigeria gave the nod to the merger of Unity Bank and Providus Bank with a 700 billion naira loan package. The support package strengthens Nigeria's financial system and avoids potential systemic risks, according to the CBN. It is the second merger since 2019 after the Access Bank Diamond Bank deal, and creates a 243 branch entity with asset size of about 2.43 trillion naira and 848.9 billion naira deposit base. The new bank still requires 151.8 billion naira in recapitalization funds to meet the central bank 200 billion naira capital requirements. But the tidier balance sheet has a better chance of raising the additional capital. Senior business analyst Lekon Shote comments on this deal.
We shouldn't really be surprised that Unity Bank is going to be taken over by another bank. You see, out of the 9 legacy banks, 5 of them were owned by Northern Nigeria interests, either governments or private individuals. And then the first managing director was deputy managing director of Bank of the North. And Bank of the North, yes, was registered as a commercial bank. Also, New Nigerian Bank was also registered as a commercial bank. But they pretty much operated almost like development banks, and they were not too strong on one risk assessments, consideration of collaterals, and requirements for payments. So many of those banks actually ended up with large portfolio of non-performing loans. And that was why they had problems. And that was why they all came together and formed Unity Bank of Nigeria. Now, the dominant culture, those 5 banks owned about 64-65% of the shares of Unity Bank. And the dominant culture was that of Bank of the North, which incidentally had owned just about 3 or 4%. But the culture of indulgence was very strong within that bank, and it continued into the Unity Bank. And so, like I said, one should really be surprised that this happened. And then Providus Bank showed up. And some people wonder why Providus Bank, that is less than 10 years old. Well, this had happened before. Standard Trust Bank took over UBA, one of the big 5. And so it's not really a surprise that this is happening again this time. Now, is Providus Bank making a good investment decision? Oh, yes. One, Providus Bank has a very lean workforce. They have about 6 or 7 or 8 directors. Only 2, the managing director and 1 executive director, are executive directors. The others are non-working directors, including the chairman. And they are all very, very thorough professionals. And they are doing well in their private businesses wherever they are working. And they bring in serious professional discipline into the management of Providus Bank. So that's one strength. 2 is that in spite of the problems of Unity Bank, it has a very large number of bank branches in northern Nigeria. And in addition to that, most of its customers are SMEs, which incidentally is one of the focus of Providus Bank. So there is a synergy here. And I think it's very likely, if they continue with the disciplined approach and impose their disciplined management style into the new, bigger Providence Bank, I think they'll be able to rein in a lot of the excesses of Unity Bank. And I believe that they will be able to take over a lot of, recover or recall a lot of the loans that have been given out. And I think it's a good thing that the the bank is not allowed to collapse.
Indeed, there are three principal issues with mergers. First is the strategic and cultural fit. Successful mergers are driven more by a compatibility and synergy that adds value from the marriage. If Providus Bank wants to be a nationwide branch bank with presence in all the corners of the country, requiring a network of profitable branches, then there could be some sense in this merger. The strength of banks are increasingly in the quality of assets, customer base that enables access to cheap source of funds, and disciplined management processes such as assets and liabilities management and risk management, as well as technology-enabled operations. Sprawling spread of unprofitable branches can be a drag. Second, a bigger bank is not necessarily a better run one. This is also where cultural assimilation tends to be an issue. Where there is a cultural fit and alignment, there is a better chance of success than where you hope a bad bank can be redeemed by a good bank. Third, a marriage driven by survival or convenience rather than by strategy can be problematic in future. After the challenge of raising capital subsides, the realities of two odd partners trying to live together with different values can lead to tensions. My advice is not to underestimate the cultural dissimilarities and the efforts required to envision afresh to address today's contextual realities instead of being held back by legacy service paradigms. There are also many softer cultural change issues that need to be managed beyond the numbers. For the central bank, the future of banking is increasingly linked to a new digital age with new approaches and technologies requiring fresh thinking and the encouragement of a new generation of banks that are now emerging with more informed approaches to risk and assets and liabilities management, which puts talent also at the center of strategies. Also, as we transition away from branch-based banking to this new digital, far more effective service delivery models that also promote inclusive economic growth. The world is at the cusp of evolving something different in banking. Regulators should help incubate this process, and sometimes the older models have to be allowed to die out. Providus Bank is said to be ahead in its technology assimilation. Let's see how that will work out, especially as it leverages that savvy. Also, the greater challenge to Nigerian banks is the weak external economic front. A slow-growing economy beset with high interest rates and other inflated costs and FX instability can have very adverse risk implications that cannot be ignored. Comprehensive de-risking of the environment with better infrastructure and market attractiveness for investors is therefore more of an imperative than injecting billions in what could be a drain pipe. Central Bank announced that it was reintroducing the publication of several key economic indicators, including Purchasing Managers Index, Business Expectations Survey, Inflation Expectations Report, and other macroeconomic indicators, which can provide stakeholders accurate insights and also provide data-based evidence to support monetary policy narratives. A broadly green day for markets as sentiment was chaired by calm earlier in the day after most of last week's jitters abated, and the latest US inflation came lower than expected. US stocks opened mixed after the inflation release, with the Dow Jones Industrial Average higher. But now I can see that most of the stocks, if not all, are broadly more positive. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Again, thank you so very much for watching. Bye-bye.